Today is Monday, October 25th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. Today's guests are Alan Bush, ADM Investor Services Senior Financial Economist, and Mark Soderberg, Senior Ag Risk Specialist at Archer Financial Services. Mark, let's talk grains. As we move through the last week of October with harvest moving into the home stretch, what are your expectations for the upcoming USDA report, both in terms of production and how demand seems to be shaping up?
Well, as far as production is concerned, the pattern we've seen here from the USDA just doesn't happen very often. As we look back a few months, in the month of August, the USDA raised both their corn and soybean production estimates, only to reverse course and raise these estimates in September and in October. Now, in corn, this has only happened 5 times since 1990, and in 4 of those 5 years, the final production figure was above that from the October estimate. This year's production estimate at October at 15 billion, 19 million bushels, and their average yield at 176.5. That is the second highest ever on both metrics. In soybeans, this pattern has occurred 4 times, and in all 4 years, the final production estimate from the USDA was above the October estimate. This year's estimate in October at just under 4.45 billion bushels. That's already a record high. The yield estimate at 51.5 bushels per acre. That is the second highest ever. So historically, I think there's a pretty high probability that the USDA estimates are going to be higher here moving forward. On the demand side of the equation in corn, I think the current export forecast at 2.5 billion bushels, I don't think this is going to change much, at least for the next few months. Export commitments, they're currently running at a record pace, up 4% from a year ago, while the current USDA forecast is actually down 9%. However, we caution that this record high sales level, this is largely due to large exports or large sales to China made this past spring and early part of the summer. Since then, China's largely been absent from importing U.S. corn. At the same time, China has raised a mammoth corn crop of their own. So I think this really calls into question the need for China to import the same amount of corn in which they did a year ago. So I think this number is going to hold steady. On the flip side, in ethanol, production margins there have really firmed up in recent months. Last week's production figure was the second highest ever, and well above the pace we need to be at to see to reach the USDA forecast. So I'm looking for about 100, maybe even up to 150 million bushel increase in this usage figure. So in the end, the current U.S. ending stocks figure 1.5 billion. I think that's going to come down a little bit. A slightly higher production going to be offset with higher demand, particularly from the ethanol side. In soybeans, a little bit different story. Here, the exports, they just continue to fall behind the pace we need to be at to hit the current number at 2 billion, 90 million bushels, as quite frankly, China has been slow to switch over buying U.S. soybeans. So I look for about a 25, maybe even up to a 50 million bushel reduction here. I think this will partially be offset through a higher crush estimate. Crush margins here in the U.S. have also firmed up quite a bit recently, largely driven by soybean oil. Globally, vegetable oil prices have been shooting up. So I look for about a 10 to 20 million bushel increase here. In the end, ending stocks are likely to grow from that 320 million bushel figure in October, likely by 25, maybe even 50 million bushels, higher production and slightly lower usage.
Mark, as this fall harvest moves on here in the U.S., South America starts to plant their crops. How are things developing in the southern hemisphere?
Well, overall conditions in South America are much better shape than they were a year ago. much of Brazil's northern and central growing regions. They've seen much improved soil moisture with recent rains. However, as La Nina conditions still persist, I think we have to take a little bit of caution moving forward, particularly areas in southern Brazil and in Argentina. La Nina conditions generally are associated with above normal temperatures and below normal precip here in their summer months. So we'll have to watch that moving forward. Soybean plantings right now in Brazil, they're likely over 30% complete, well above where they were a year ago. And for this date in late October, that would be the second fastest pace ever. Their first corn crop, this is the one that they largely use for domestic purposes. Plantings there are just over 50%, also well above the historical average. In Argentina, bean plantings, they're really just kind of getting underway. Their corn crop at this point is about 25% planted. And again, also much improved from where they were a year ago and above the historical average.
Mark, one quick question for you here before I move on to Alan. Can you comment on the large speculative trader? Where are they positioned in the marketplace and how this might impact prices?
Yeah, in corn right now, money managers, they're long roughly about 220,000 contracts. They have been net long the corn market now for over a year. Their long position peaked at just over 400,000 contracts earlier this spring. And really in the last couple of months, this position has been kind of trending sideways. I think the speculative traders, they're pretty comfortable with what they're seeing from the USDA in terms of production, usage, ending stocks. What they're really waiting for, I think, at this point is to see whether we have any weather issues in South America or if China returns to be a big buyer of U.S. corn. Without either of these two things happening, I'm guessing they're going to continue to shed length in the marketplace and possibly, being flat the market or even flipping around to next short. So as a result, price-wise, I think we have downside price risk to about the $5 level for the spot futures, possibly even down to $4.80 if we look into the early month or two of next year. In the soybean market, the speculative traders, they're long the soybean oil, they're short meal, and now they're about flat in soybeans. They have been long soybeans now for almost 2 years. And now that it's down, their long position is just under 20,000 contracts. So with soybean oil stocks growing, I'm guessing the speculative trader here will also continue to shed length, possibly flipping their position around to be a net short here within the next few weeks. So as a result, with growing stocks, and I think funds will continue to lean on things a little bit. I think we're going to set up another test of this 1185 figure. This is a low we made earlier this month, possibly even down to 1120, 1150 here as we get into the new year.
Thanks, Mark. Alan, turning now to the financial markets, what can we expect from the November 3rd Federal Open Market Committee meeting, and how will this affect the 30-year T-bond?
Well, first of all, it seems extremely likely, almost a 100% chance that the Fed will keep their Fed funds rate unchanged at 0 to 25 basis points. But will be more controversial is if the Fed announces that they will be tapering their massive quantitative easing program at that meeting. And the feeling is that they will to one degree or another. So my belief is now on the 30-year Treasury bond futures in advance of that likely tapering, which in some sense is a reduction of accommodation, that the Treasury bond futures will have a very difficult time advancing. However, once that meeting is out of the way and that negative news on the bonds is known, that at that point, I then think that we will see a new leg higher in the 30-year Treasury bond futures as traders then, I believe, start to focus on the bullish impact of what appears to be a slowing rate of growth in the global economy.
And will the stock index futures continue to advance if the Fed tapers its $120 billion per month in asset purchases?
Yes, I think they will. In fact, keep in mind that with rates still basically at zero here in the U.S., unlikely to be increased anytime soon. Interest rates in the Eurozone and in Japan still negative, at least in parts of Europe still negative. So there's still plenty of accommodation around, even with the tapering, if we do get that announcement. So yes, I think the trend is still higher for stock index futures.
Finally, Alan, what's your outlook for the U.S. dollar index?
Okay, the dollar index, once again, we have to look at the Fed meeting and what they're likely to do at the November policy meeting. And in advance of that meeting, since it is apparently the consensus view that there will be some type of tapering announcement, from an interest rate differential expectations point of view, that would be supportive to the dollar index. And as we get closer to that meeting, or to that meeting date, there will be more focus on the Fed and what they may do. So with a breakout today to the upside, in fact, there was a 10-day downtrend line that was just today penetrated on the upside. I would expect continued gains up until at least that November 3rd FOMC meeting.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests, should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.